Well, it's really nice to have in our studio here at the World Retail Congress in Amsterdam, Stacey Widlitz, who's the founder and president of SW Retail Advisors. Stacey, thank you very much indeed for joining us.
Great to be here.
It's a hell of a roller coaster for investors at the moment.
That's an understatement, yes.
Where do you place your bets now in order to make sure that you deliver superior returns for the people who are giving you your money to invest?
Yeah, it's so difficult right now because we heard a lot at the conference here about the fact that every day there's a tweet about tariffs and there's changes and it's so unpredictable. Retailers are really struggling with how do we manage our business? And it's not just about tariffs between China and the US, it's the UK, it's Brexit, it's when is this uncertainty going to end? So everybody's got all these different cost scenarios. And at the same time, they're trying to invest in sustainability. So, I look at the retailers and say, who's really driving traffic and who really understands the consumer and is actually trying to personalize, and that's another subject we heard a lot about at this conference.
And why is personalization now, do you think, a driver of superior shareholder performance?
I think that the customer wants to feel like they're special. They want an experience. They want to leave with a memory. I heard someone say that on a panel yesterday, and I thought that was a great description. It's about leaving the store with a memory and an imprint. And I think the retailers that are able to do that are the ones that will continue to gain share, and also just the ones that are simply listening to what their customers want.
How difficult is it to look at a quarter-by-quarter performance and really understand what's the underlying trend of those specific retailers?
It's very difficult, and I think that's why a lot of companies, specifically retailers, are moving away from quarterly guidance, and also why, years ago we saw retailers report monthly sales. That's gone. I mean, with the exception of a few, of course, because you have all of these unpredictable factors, whether it's weather or tariffs or, it's very difficult. So looking at it on an annual basis makes a lot more sense. And, even basic things like if you think about the tariffs that are coming in, you can't raise prices overnight. It takes at least 30 days to flow through the system. So to have to manage that and expectations on a quarterly basis is just impossible these days.
So we're in the realms of, China looking outwards, the rest of the world looking inwards. Maybe that's one lens to have a look at it, but we're certainly in the world of a slightly less freer trade agreements than there have been in the past. What impact do you think that's going to have for the retail industry, its relationship with Wall Street, and also the ability to pass on pricing?
Well, I think that there's no doubt, and retailers have talked about this, that they will have to pass on pricing.
To its full extent, or will somewhere in the system be able to absorb an element of the new tariffs?
So I think everybody's going to share in the pain.
Right.
So I think the retailers and the brands will, of course, go back to their vendors and say, listen, you got to do better, and here's the situation. And then whatever they can't squeeze out of there, they will pass on to the consumer. And I think that, again, this will take some time. So these price increases will likely happen in Q4, just in time for the holiday. Yes. Happy holidays. And
so really this year, buy early.
Yeah, well, that's the thing. That's the interesting thing, is that if the consumer is reading all the headlines, perhaps if they're thinking about a big ticket item and maybe, saying, oh gosh, the prices are going to go up so much, maybe I buy it now. So maybe it helps right now, but hurts when we really need it in the holiday period. And then, of course, what happens? Prices go up, but then everybody has to discount to get everybody interested and start moving traffic. So I think it has a significant effect.
Do you think that anybody will win in this trade war?
No, I mean it's tough, but obviously some will be hurt more than others. Like if you think about the dollar stores and the low price stores that have higher exposure, or the toy industry that has higher exposure to China, the footwear industry is more exposed to China and perhaps takes longer to move out. But the good news is this, for a lot of the apparel sector, I mean, PVH that owns Tommy Hilfiger, that was at the conference, The Gap, they have all talked about the fact that they have decreased their exposure significantly to China over the past couple of years. I think PVH was 40% exposure to China just 3 years back. Now they're 20. So it's already moved out and moved to places like Vietnam. The risk is that if there's this huge rush out of China to places like Vietnam, that there's inflation there as well.
Yeah. Well, you spend a lot of your time advising the investment community as to what to do with their money. From a retail perspective, where's the hot money going to in terms of sectors, areas?
Right now, it's still very much about footwear. Right. It's about the retro trend. It's about footwear. It's about, you know, the comeback clearly of Nike, the technical product, and certainly what they're doing in women's wear. And of course, it's about athleisure, but combined with real technical, and that's of course Lululemon, and also I would
What
think,
is the great success of Lululemon? It's it's definitely on a resurgent, isn't it?
Absolutely. I mean, they had a misstep many years back with some of their fabrics, and you know the famous see-through fabric incident, and they've really come back from that, and they just have a brand that has such strong technicals and such great consumer loyalty, and they still have a ways to go to improve their tops business. And I would say also that I think to some extent they have increased their sizes as well online, which is another theme that we heard about this conference. So some of the athleisure brands are now starting to actually speak to real women that are on average, I think 70% of women in the US are size 14 or higher. And I think some brands are finally starting to say, listen, we're going to start to embrace the average woman and speak to her and not exclude her.
Well, it's very difficult to predict the street and the city from 1 hour to another.
Yes.
But it's going to be an interesting 12 months. What are your couple of interesting predictions, you would say, for the next 12 months?
For the next 12 months, you know, I still think the retailers that are driving traffic, like a Target, that are looking at who are the specialty players who are not getting it right, and they're actually taking those businesses like the lingerie business, perhaps that Victoria's Secret's had to stumble, and putting it in their box and giving the consumer what they want. I think, and they're doing it in a private label manner, so they have to be less promotional. I think. So that's a winner. And I think still some of the luxury guys that are speaking to a younger consumer, LVMH has never looked better. And then I think, of course, also you're starting to see the trend of all the digitally native brands start to open stores. Yes. So yesterday...
And also appear in other people's stores as well.
Yes, appear inside stores.
Yes.
So all of this Armageddon store closings now, we're starting to have a different conversation, which is the digital brands are now going real life.
And that's a little bit, it's either ironic
or it's absolutely
part
ironic.
Of the wonderful sort of hurly-burly world of retail. Stacey, thank you very much indeed for joining us. It's been a pleasure.